First half of the trading year winding to a close today. Despite a rocky June, the major averages still posting gains of about 8% for the year. So are the bulls going to rule on Wall Street going into the second half? Let's talk to Alan Lancz, president of Allen B. Lancz and Associates. Also Ned Riley, CEO of Riley Asset Management in Boston. Guys, good morning to you both. Alan, you say if we're going to look at the number one factor for the markets in the second half, forget oil, right? Forget private equity. Forget it's going to be interest rates, right?
Yeah, interest rates. I mean, that's why we were so bearish last month, Carl. Interest rates went up even higher than we expected the first half of June. And I think the trend of interest rates is going to dictate as far as what stocks do the second half.
How bearish does that make you going into 2H?
Well, I think basically what the month of June did is it put risk back in the investors' equation. Before, I think we had one down month since May 2006. So now that investors are looking at the risk equivalent with the subprime loans, with interest rates going up, with higher energy, it's a situation where you're going to have more volatility. You're going to have these 100-point swings, et cetera. So I think the smart investor takes advantage of those swings, and those glory days of being up every month are going to be over.
Ned, how about you? 5.25 spook you? 5.5?
It spooks me, but I don't think we're going to get to 5.5. I don't see it out there. Tell me the reasons why. Right now, you've got an inflation rate that's in the target for the Federal Reserve. 2, you've had energy prices still at $70 a barrel. For what reason, I have no clue. But the bottom line is that inflation is tame. Look at it globally. 35 countries reported for the month of May already. Their inflation rates are coming down. So I don't know why interest rates have to go up. I think it's more a factor of derivative trading right now, and that unfortunately the Treasury market got caught in the middle here. But bottom line is I see the 10-year Treasury at 4.5% by the end of this year, and I see the market probably moving another 5 or 10%.
Alan, what do you think? Is the market, are they more immune to rates than maybe even you think?
Yeah, I think we are. I think there's a record number of bank loans out there. Some of the covenants aren't as disciplined as they should be. 2006, we had a record issuance of high yield debt, and 2007 year to date, we're on pace to break that record. So obviously, even interest rates at 5.25 is problematic. And I think you add in the subprime loan problems and the hedge fund derivative problems, and like I said, risk is back in, so you're going to have these volatile days. If interest rates go down as low as Ned thinks, it'll be a good period, but I don't think interest rates are going back down to 4.5.
Ned, you're actually looking for
some downside.
Ned's looking for some multiple expansion here. Ned, how much?
I think probably anywhere from 10 to 20%. I mean, if you look at the historical relationship between interest rates and inflation and price-earnings ratios, I mean, clearly we should already be at about 18 times earnings in the S&P. We're not. As a matter of fact, earnings have gone up substantially more than the market has over the last 4 to 5 years. I think the bottom line is that investors are still scared. They're apprehensive. This is not a bull market in many people's minds. As a matter of fact, the public, I still believe, is waiting for that tech group to start moving back up again. And if you start to look at commentaries, and all due respect, the bottom line is there are many people out there that are looking for corrections, and they've looked for corrections from 10,000, 11,000, 12,000, 13,000. Yeah, you're going to get a correction sometime, but the bottom line is I don't hear people talking about equities forever. I don't hear them talking about that's the best place to be for an investment long term. When that kind of talk and commentary starts to evolve, I will get nervous. But right now, I don't see wildly bullish people out there. I just see a lot of very apprehensive investors that have supposedly all the reasons for the correction. If you can articulate those reasons now, you got to think of something else that's going to blow up, because these have already been discounted.
It's been a crazy 6 months, guys. It's going to be another crazy 6 in the second half to come. Thank you both, Ned and Alan.
Thank you.
No problem.